what is a demo or a real account? And he was like, yeah, I've been on a demo account for 3 months. Now I got a live account and I'm up 45% in the last 6 months. And I was like, okay, so why are you asking me if you need to purchase another course? You already got everything you
Was he
need.
in? He was in. He had
So
already
it's
been
always
in
the
a
brain
trading
which need
course.
to catch up with emotions.
Yeah. So it sounded like he had been in the trading course. He had taken that information, put it into like a real practice, and ran with it, and then he was profitable over a period of several months. And then he was asking you for your opinion.
Yeah, I mean, it was
Yeah.
just mind blowing. Again, I don't know if you kind of pay attention to the figures. 45% up in 6 months,
Yeah.
and I
I
was like,
think
"Are you fucking kidding me?"
I think the funny thing is that if you had told him like, "Nah, I don't approve of that," he might have scrapped a profitable strategy.
Yeah, I that's, I mean, it is funny, but it is sad. It's like, of course I didn't tell him, but when I kind of shut off the conversation and I closed, the Discord, I was like, I mean, this guy must have real confidence issue, because if you are able to make 45% in 6 months and you are still not convinced of your skill, I mean, there is something going on there.
Yeah. Yeah. Basically. And
I mean,
one thing.
why in the name of Christ are you asking me for confirmation? The numbers should tell you, right?
Yeah. One thing I loved reading Mark Douglas's Trading in the Zone. It's one of my favorite trading books. And there are a lot of great quotes in that book, but there are some quotes that were harder for me to interpret than others. And some that one of the hardest ones from that book was, and Douglas said that the amount of returns you get out of the market is directly proportional to your self worth and self validation on an internal level. And that was something that is one of those things I didn't really internalize it first, or I didn't really understand it that well. But you know, he understood a lot of the other principles of trading very well. So I just kind of assumed that that was true, and then I've actually found it to be true.
But
As time goes on. So
mm, yeah, but what was that you weren't able to actually get out of it? I mean, what was the problem with that specific sentence,
well,
if I
because it
can
doesn't
ask?
seem like it makes sense, right? I mean, it's like, well, like if you think that if you have a high valuation of yourself, that that could be pride and arrogance, and that wouldn't necessarily be a great thing to have in the market, and that
Oh,
you would want to
okay.
be a little humble and have not necessarily a high opinion of yourself. That is what I would have thought, right? But
Oh, yeah, yeah, yeah.
I
Got it.
guess there's a
It's
different
like,
there's a difference between pride and humility, and then
yeah,
like internal self validation and self worth.
yeah. I mean, it is a real thing. As much as it can be kind of abstract in a way, but it is real. It's like, I mean, it's like in the Matrix, right? In the Matrix movies, you know that the mind controls the body. So if you're mentally, stable and you're pretty confident in what you're doing, you know that you're doing something which is logical, it makes sense, and your stats, your numbers are showing you that over a long period of time, you're actually making good. um, there's no reason why you should doubt yourself, right?
Yeah, I mean, there's no reason to, or there's no beneficial reason to, you know.
Yeah, and it kind of, these particular quote you bring on about Douglas, it kind of makes me think back about another quote which I found particularly interesting and very motivating, uh, which is from Tom Dante, or Trade Dante, as you can find him on Twitter. And it was like, in order to be confident, you need to trade with confidence first. It's not the other way around. It's like, because otherwise it's like a circle. It's like I'm not making money now, so I'm not confident. But I'm gonna be confident as soon as I'm start making money. And no, it's the other way around. You need to
Yeah.
be confident in order to be able to make money,
So you
right?
touched on a great point. So a lot of times, traders will have what you have to call beginner's luck, right? They have a they don't
Yeah,
know anything about the market, and they're still able to put together a major winning streak. And one of the reasons for that is because they're approaching the market with a state of extreme confidence, right? Because the market hasn't stripped that from them yet, because they haven't
yeah, and
experienced, you
they
know,
never lost. Yeah,
yeah. So they're approaching the market with the confidence that you need, right? And that can actually lead to
yeah,
success, even if you don't have a methodology. And
yeah. It's crazy, right?
yeah,
And
of course,
but
because they don't have the risk management methodology, then they'll get fucked up along the way, and
yeah,
like we all
sooner or
know.
later, yeah.
But if you can create that confident state of mind, right? Later on, then that's ideal. And
I
the way
think
I do
what you're
that,
just describing
that it ties
it would
into.
be what Mark Douglas. Ah, sorry.
Well, I was just going to say it ties into kind of my philosophy around taking profits, right? So I measure my strike ratios, how many times my first take profit hits, just because that's when I start getting into trade management. But you might also want to, if you think about like my third take profit represents 60% risk booked on the trade, and if you think about, and then the stop moves up with it. So by the time I take the third profit, I have 60% booked, the majority of the risk on the trade booked, and the stop is generally marginally in profit.
Yeah.
And that what that represents is a risk-free state of mind, right? When you've already booked 60%, the stops, either at break even or in profit, and then you still have 40% on the table. You enter into a risk-free state of mind, and that's the type of
Um.
mindset that you can look at, have that type of confidence when you look at the market.
Yeah. I agree. Like 90%, if you allow me that. No, it's just like I the first part I completely agree with that, and I do that too. I try to take first profit up, levels that I deemed as FTA, aka first trouble area. So whether let's say if I'm long, I want to take first profit at the first resistance identified on the chart. Okay. And at that point, I know, okay, I basically eradicate the risk because now, let's say I took 40, 50% off and I'm moving the stop at break even or slightly in profit. So I'm going to be, calm and cool to manage the rest of the trade. But on the second part, like, this concept of a free risk trade, I need to elaborate a little bit more on that because, again, getting back to Dante, he's one of the biggest influential figure in my development, and he says there's no such a thing as a free trade because if you think about risk reward is not a static concept; it evolves throughout the trade. So, just to make a very mm, idiotic example, let's say you enter the market and you have a 10 pip stop. You have already taken your first profit objective, so you're cool. You cannot lose at this point. But now you have to manage a trade. Okay. So originally you had a 10 pip stop. Now you're up, let's say, 40, 50 pips. And you're running for a final target of about, again, for the sake of the example, 90 pips. Now, at this point, you need to start to think about your risk reward in terms of evolving R, because at a point, it's not about this trade is a free risk trade. No, because you're up. So your P&L, although it's not realized, but it's just it's just a click of a button and you can bank it. So it's not about being so calm and being so careless while you still have money on the line, although they're unrealized, but you still need to manage it as, you know, let's say again, 10 pip stop, 90 pips target, you are halfway through it. Okay. You need to start to manage it like you don't want to give all back. because at that point you're not having a free risk trade. You're losing 40, 50 pips, right? You know what I mean?
Amen, brother. Yeah, that I agree with you. The you know the market is dynamic and it's constantly changing. The risk reward profile is constantly changing. So I totally agree with you on
Yeah.
that. I think
And it was,
where I'm kind of
yeah,
coming
yeah.
from is that
Hit me up.
uh, is the difference between like the state of mind you're in, right, when you're trading is and think about the alternative, right? Like if you had a trading model that made you spend 80% of the time in the market. So say you were to graph your time in the market as like a duration, right? And you were to somehow break down the amount of time you spent in a trade and how much of that time was spent in a trade that's underwater versus in profit. If you had a
Oh,
trading model that forced you to spend 80% of your time underwater, you might have a system that, on paper that doesn't matter, and wouldn't matter on paper, but in reality, it's like
yeah,
playing the game on insane difficulty, and it's just
yeah,
going to, why would you do that? Why would you force that on yourself?
yeah. I totally,
You know.
totally agree with you. I mean, the psychological factor. I mean, sometimes I even get, obsessed or worried or stressed out about, trades, and I'm trading in 1 minute, okay, and I'm getting kind of, I feel myself tickling if price staying, you know, below or above my entry for just like 4 or 5 minutes, and maybe it's not gonna go well. Should I be worried? I mean, and I'm already start to doubt myself, right? So I get your point. If you have a model that actually allow you to have your entry field and an immediate reaction, it's much more relaxing. Yeah, I totally agree with that.
So probably you wouldn't want to define what I said as a risk-free state of mind. You'd probably be better to define it as something else. But the idea kind of is that you want to spend most of your time in whatever that is, right? And in
Yeah,
profit, I guess you could call it in profit. Um, but managing, not only just being in profit, but taking profit, dynamically managing the trade when it's in profit and
right.
spending most of your time there.
Oh,
Um,
yeah,
and the reason why is because that's when you're in the most, when you're doing that, uh, and taking off risk and profit, managing like that. That's when you're in the most objective state of mind, right? You're able to perceive what's happening in the most objective way, and
yeah.
that's where you
I
want to
yeah, I
spend
totally
most of
agree.
your time,
Yeah,
right? Because then you have less limits on your perception, and then if like something
yeah,
changes or the market changes around, uh, you're going to be a little more dynamic and flexible mentally to see that, right?
yeah. Before we go ahead, I'm watching. Rob posted a thing in the main page.